Dear students, this is Dr. N. Srividya, Assistant Professor, PG and Research Department of Business Administration, JJ College of Arts and Science, Autonomous, Pudukkottai. Now we shall see an introduction to accounting. First, we shall start with definition of accounting. Accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transaction, and events which are at least of a financial character and interpreting the results thereof. So, accounting is an art. We cannot apply accounting unless it is learned, so it is an art. It is the art of recording. So, recording is done in a book called journal. Small firms adopt journal for larger concerns, subsidiary books. Recording is done in chronological order and classifying is done in a book called ledger. Classification is a process of grouping transactions or entries on a predetermined basis. In and summarizing is done in trial balance, trading account, profit and loss account, and balance sheet. The classified data in the ledger is presented periodically in a statement called trial balance, which may be useful for the owners and other interested parties. And in trading account and profit and loss account and balance sheet also, summarizing is done in a significant manner. The accounting process of recording, classifying, and summarizing must be carried on in a significant manner. Each business has its own peculiarities, special problems, and particular requirements. The management of the business needs specific types of information for controlling and decision making process. Sales and purchases may have to be shown for each product, division, department, and brand separately. Profit or loss may be required independently for each product or service. Significant manner as per the requirement of the firm has to be incorporated at every stage in the process of recording, classifying, and summarizing business transactions. Next one is in terms of money. All business transactions have to be recorded in terms of money. It is the medium through which all the business transactions are expressed. Land and building in square feet, furniture and fixtures in number, stock in units are all recorded as per their monetary values. Money measurement is the basis for accounting. Transaction and events of financial character. All those business transactions and events which are financial in character are recorded in accounts. All the events, dealings, and happenings which have no financial effect are completely ignored in the accounting process. For example, working conditions, skilled workforce, sales policies, employees' morale, etc. are all important for a business but they have no financial character and are omitted from accounting process. The next one is interpreting the results thereof. Interpretation of the results is needed for various purposes. The trends observed in sales, purchases, expenses, etc. are useful for future planning of operations. Data about customers and suppliers have to be interpreted to decide about credit policies. The owners are interested in the amount and growth of profit. The creditors are interested in the liquidity and stability of the business. So, interpretation is usually done through ratios and flow statements. They are useful in evaluating past performance and providing guidance for future plans and operations. Next, we shall move on to the objectives of accounting. First one is maintenance of books and records. Accounting records have to be maintained systematically and have to follow generally accepted accounting concepts and conventions. The next objective is ascertainment of profit or loss. Accounting helps to know the net result of operations of a business. Owners, management, investors, creditors should be supplied with the results of operations as per their requirements. The next objective is depiction of financial position. Proper records of all the assets and liabilities show the firm's position as well as obligations. With the help of such records, balance sheet can be prepared at any time. The next objective is providing information to various interested parties. Accounting information is communicated to various parties in the form of various reports. The major purpose of providing information would be decision making, controlling resources, facilitating smooth and easy business functions, etc. Next, we will move on to advantages of accounting. The first advantage is replacement of memory. In a large business, it is very difficult for a businessman to remember all the transactions. Accounting records provide information as and when desired, and it replaces human memory. The next advantage is it is accepted as evidence in court. Properly maintained accounts are often treated as a good evidence in the court to settle a dispute. Then it helps in settlement of taxation liability. If accounts are properly maintained, it will be of great assistance to the businessman in settling the income tax and sales tax liability. Otherwise, tax authorities may impose any amount of tax which the businessman will have to pay. Next, accounting helps in comparative study. It provides the facility of comparative study of the various aspects of the business, such as profits, sales, expenses, etc., with that of previous year, and helps to locate the significant factor leading to change, if any. Now, it helps in sale of a business. If accounts are properly maintained, it helps to ascertain the proper purchase price in case the businessman is interested to sell the business. It also assists the insolvent person. If a person is maintaining proper accounts and unfortunately he becomes insolvent, he can explain many things about the past with the help of accounts and can start a fresh life. It also helps the various parties. It provides information to various parties, owners, creditors, investors, government, managers, research scholars, public and employees, and financial position of a business enterprise from their own viewpoint. Next, we move on to the limitations of accounting. Accounting measures only events which are financial in character. It measures only those that are capable of being expressed in terms of money. Non-monetary items such as quality of human resources, products cannot be recorded in books of account. Then it is based only on estimates. Accounting is based only on estimates and forecasts, and hence they may lack in accuracy. Similarly, the personal judgments of the accounting experts may influence the maintenance of records. Then the record is of historical in nature. Accounting provides only historical data. They do not consider the current market prices. Price level changes are also being ignored. Hence, the information reflects only the historical price and not the current price. Now we shall see the three branches of accounting. First one is financial accounting. The accounting for revenues, expenses, assets and liabilities that is commonly carried on in the general offices of business is known as financial accounting. The financial accounting information is expressed in financial statements, that is trading account, profit and loss account and balance sheet. The owners, creditors, management, employees, etc. make use of information provided by financial accounting. The second branch of accounting is cost accounting. It deals with the classification, recording, allocation, summarization of current and prospective cost. It is essential for pricing products and services and for cost reduction and cost control. It is useful to the management. Outsiders are not usually provided with costing data. The third branch of accounting is management accounting. It is meant for managerial decision making. It provides discharging its functions of planning, organizing, coordinating, directing, and controlling. All the policy decisions are made based on the data provided by management accounting. Thank you.